Hey, good evening, everybody. This is Dennis Wilburn with the Active Trend Traders. I'm checking in with you so we can conduct the After Market Monday, and this is a recording today for June 19th. I was unavailable right immediately after the market closed today, and so I wanted to get a recording in place for everybody to take a look at this evening. I want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. The objective of today's session, as most of our aftermarket Mondays, is one, provide timely actionable intel at the beginning of the week. So if you have decisions to make regarding particular investments or trades that you're looking at, you can make those decisions. Okay, we present some of the trades that I'm going to be doing through the week. Then we take a real quick look at stocks, ETFs that may be setting up, and then occasionally some what else's. Do we have a what else to show you tonight? So what am I looking at today? I'm looking at Nugget. I'm looking at UCO. I'm looking at, and one I'm missing off of here is VEEV. And then I'm looking for setups to happen with Tesla and NVDA for strategies 1, strategies 2, and also strategy 3, since our orders did not trigger today for strategy 3 with the active trend trading system. So I'll come back to, well, let's go ahead and hit this. Well, I'll come back to the gold seasonality chart after we get to taking a look at the intraday chart. So what are the intraday charts telling us? Well, one, S&P. S&P breaks out, gaps up from last week's little short, tiny, pull back into the 20-day moving average. You get a rebound off of that. What makes these so sometimes challenging to trade is you see we don't get a lot of setup unless you're looking at either an intraday chart or a daily chart, because right now what were we looking at? We were looking at the TSI falling down. We were looking at momentum falling down, and a little bit of the longer term momentum on the market forecast, daily charts falling down. Didn't really get a downtrend per se, or a pullback. Wasn't a nice neat pullback like you see over in an area like this where it pulls back over several days, hits a level of support and bounces. This is just one of those 1, 2, go. 1, 2, go. And the market's been doing a lot of those. We see one here. We get initial sell-off at support, 1, 2, go. This one was a little bit better here, but anyway, we would break out to new highs. So now this 24.46 becomes a support level. Keep that in mind. Moving forward, nothing really to report on the longer term weekly charts other than we still have negative divergence on the TSI, even though it's still kind of just trickling up. Let's take a quick look at NASDAQ. What's the NASDAQ telling us? NASDAQ rebounded off of, it came down last week, touched off the trend line at the 50-day moving average, got a nice little gap up today. What might we want to do? Because clearly the weekly chart could turn around and TSI reverse back up. Well, with this little gap up, we can trade around the 820-day moving average to see if that is and if it, if we get into a trade on, let's say, TQQ at the 820-day moving average, if it breaks below this level here to fill this gap, I would go ahead and close it and look for a rebound here. This kind of market that we're seeing right now is very, very prone to whipsaw. We did a trade on TZA, which was the inverse of the TNA, which of course is the 3-time leveraged index ETF of the Russell, and we got whipped out of that. And as you can see, we had started to pull back down. It hit support, and when support works, it's really great, but not much of a reversal. Again, everything looked to be in gear to float down. Let's see if we get a pullback up into resistance up in this 1430 to let's say 1434, 1435 level with negative divergence on a daily chart to go along with the negative divergence on a weekly chart, and see if that lines us up to do a pullback down here to the bottom. These inter-range pullbacks are really a challenge to trade, to be able to get into with any expectations that you're going to move back up to the levels of either the Keltner channel and or the moving average envelope. So again though, good reaction on this. But if we were to get into a trade, if let's say it pulled back midsection of this candle for today down about the 1412 level, we got into that, we would be putting a stop down here below the 1399 level. That's in order to trade TNA. Before we move on to what the other indexes we're watching, here's TNA. Again, that would be a stop on TNA below 54 on a pullback down to approximately anywhere from say 55.80 down to the actual 55.62 on TNA. Let's take a look. Remember what we were showing on SPX? SPX was showing a really nice breakaway. Well, here's one of the reasons why Mike likes to trade the indexes. I lean more towards trading the non-leveraged ETFs if we're taking my signals, but you get two different signals today, as you can see. Yes, we get a gap up. However, what's different? The spider did not take out the old high and make a new high, and so it basically the reason for the difference is just the entities, the derivatives that they utilize to make up the S&P. The spider compared to the S&P. So just keep that in mind. We're getting a bounce up here. Again, do we, which do we take our cue off of? Do we take a long trade if the SPX pulls back into the 2446 level? One could make that argument that that's just a pullback into a breakout and expect to move, then trade the SPY and or UPRO for the other trades. Okay, let's take a real quick look at UCO. I like UCO, but I don't like it yet. I like it in that it's good, a nice uniform little downtrending channel, but these thrusts and these reactive moves within the channel are pushing back up about 20%. How much further do we have to move in order to have symmetry between this move and this move? Well, let's pull this down to this past high here, which is about there. Let's go ahead and close that down a little bit. And this shows us that if we get a pullback down to like 1270, so we could go ahead here and put I would put a alert here at $13, and if it pushes down to $13, then I could utilize that $13 to go about $13.05, $13.10 for a trigger to trigger trade back up to the upside with the anticipation. Let me put in that alert. Mark is at or below 13, and I want it to basically give me an alert, please. And what do I want? I want, oh gosh, let's do the stars and stripes forever. I don't know if you can hear that or not. But that'll be, okay, stop it. Enough. Of course, what'll make me feel really silly if that turns out to be totally dead air space and you can't, and the people who watch the video can't see it. But anyway, that would be a symmetry pullback for this move here. Now the symmetry reactive mood, of course, would be this move from here to here. Well, how much is that? That is about 28%. So if I start to get a bounce here, let's activate that, pull that back down to here. Where's that taking me to? I can't extend any further out, but it takes me up right about to the downtrending trend line. And so I could basically just measure, and if we get a reversal around this area, I could tell and say, okay, I expect the move to be 28%. I'm going to be happy with 15, and that's where I could put in my T1 or even my T2. Get me out of this trade once I gain 15%. Recognizing that oil is still in a downtrend. Seasonality-wise, we should get a bounce in oil going into the summer months and into September or into Labor Day is typically the last buying time. So let's get rid of Nope, let's get rid of that. So what are some of the other ones I like? I like Nugget. Nugget based on seasonality. As you can see, Nugget it's trying to find a bottom. It's just not there yet. Now, what is the other influence that gold is fighting against right now? Well, the increase in interest rates by the Fed. People don't have to, jump into gold as a safe spot to invest when the market's going down. They now get a little bit extra in their money market accounts and their credit unions and all that kind of stuff. So that may slow any move into gold, but we'll keep an eye on this. So the other one we take a look at with that is GDX. What's GDX? This is the non-leveraged ETF for the gold miners. Again, pushing down, not getting any reversal on the TSI nor the market forecast, but let's just hang on and wait. It's getting close to support also, and so that's what I said. I like Nugget. I like the other NUGT. There we go. Okay, what else we got here? Vive. Let's take a look at Vive. I want to show you. Well, before I go to that Nugget, I want to show you what our expectations are with the. Okay, here's the gold seasonality. Gold seasonality in both the 15-year pattern, the 40-year pattern, tends to be that it bottoms in July. It bottoms in July. So while we may get some feints to the upside, that tends to be where it bottoms, anywhere from the beginning to the end of the month, and then goes on a really nice run that tends to last until about the first part of October. If seasonality presents itself for the year, we will be paying particular attention because we want to capture this move, and that same, similar move repeated itself. 40 years worth of seasonality from 1976, it was a very good year, to 2015. And we have both a 15-year pattern and a 40-year pattern, so keep that in mind. Let's bounce back to the charts and we'll knock the rest of this out of the park. So keep your eye on Nugget, keep your eye on Vive. Okay, this is Vive taken off of a daily chart. Look where it went to? It bounced back above the 820, and so that 820 makes a really good target if you want to plan a potential entry into that. Look for a pullback into that area. I mean, we may bust out ahead above this and just keep running. The positive things is we do have positive increasing volume over 50%. And we get a TSI tick up with the momentum, and a tick up on the longer term market forecast. So good volume, and so here's kind of like, play in the middle of this large green candle. Not a bad idea. My stop on this would be basically a reversal and a drop back below the 60 level. Why am I not going all the way to here? I mean, I could size the position where I would go all the way back down to, below the 57.50 level, but this market, current market, has been getting plagued with a lot of what I would call early reversals, like we have here on TAL, which was also on our list from last Friday. But what's TAL doing? It also had a gap up, ran up to 125, and then sold off back down to the 120, 120 level, 121 level. And so it's kind of, what it may be telling us is that, hey, I'm not done doing my base here, and so I'm going to be watching this to where might it fall down to, either back down to the 50 where it's supported a few times, 1, 2, 3 supports, so we may pull back all the way to there, or close the gap up and then start to run higher. As you can see, volume on TAL, which is off the IBD 50 list, it did not have an increase in volume. Therefore, I wouldn't say it makes it necessarily a less attractive pattern, but it's showing us that, yeah, I did my initial, run to try to break back out, but it was thwarted. Sellers came in and said, nope, I'm not going to play with this one. And it may be some of the people who were buying over here thinking this was going to be a new run with TAL. They may have been buyers here and held on to this loss here, dropping down 10 points. And then this got close enough for them to say, you know what? I'm close enough to break even to take my money off the table. So, okay, let's see what else we got here. NVDA, quickly. NVDA, yay. Okay, we do get a TSI tick up on the daily chart. We're pushing on back up. We did get a breakout above the 154.95 level. We can go over to the intraday chart on this, and I'm going to stay on the intraday chart for both this and on the intraday chart. The way that I want to play the pullbacks is I want to play the pullbacks pulling back to the 50-day to the 50-period moving average, which equates to the 8-day moving average. And as long, and I will wait patiently until we get a pullback into this. But it looks as if short term that that NVDA is starting to get its act back together and start to move up. I would like to see it, again, where we're pulling back into the 850 on the intraday 1-hour chart, which equates to the 8, and watch for the bounce off of that. We'd like to see also some of these lower TSI numbers, but we may or may not get them. What about Tesla? And just as a side, NVDA, the analysts came out and are giving it a $180 price target between now and the end of the year, so that may also propel it higher. Tesla, really nice hold in the 50. So we do have an order on this for strategy 3, that if it drops down here, I think it's about below 367.25, that it will put in an order. But look what's happening after hours to Tesla. Tesla has bounced back up above and is now above 375. If I said 275 earlier, I meant 375. And so Tesla may be, pushing the envelope higher again. And but both Tesla and NVDA, we get our timing right on those, they're going to provide us some nice opportunities to the upside. So watch for the pullback back to the 8 again, and I may adjust my entry to take off, take a position off specifically off the 8 rather than what we had it, because I think we had it. Let me see the order we made, and we still that order is still in place on Tesla. There we go, 288, And what has to happen with that? It has to get down to 367.40. And today it reached, Tesla reached 367.80. So we're 40 cents away from getting filled on that strategy 3 trade. So, okay, my friends, I'm going to wrap it up with that. Hopefully that gives you some thoughts on things to look at for the week of June 18th. And we'll be checking back in to see how things fared on Friday with the How to Make Money Trading Stocks webinar on Friday. Good night, everybody. God bless.